central banks buying more gold than they ever have since it's been recorded. But do you think that perhaps what they're trying to do is orchestrate and then control this next financial crisis?
Welcome back to Metals and Miners. I'm its founder and its host, Gary Bohm. We have a fantastic discussion lined up today that I am so excited about. Today, we're fortunate to have with us Lynette Zang. Lynette is an economist that has been involved in the markets at some level since 1964 as a student, a banker, stockbroker, and precious metals and currency analyst. She's been studying currency life cycles since 1987 and discovered similar social, economic, and financial patterns that occur throughout the stages of a currency's lifetime. She believes that recognizing these patterns enables people to see what's coming and make well-informed choices that put their best interests first. Today, Lynette's focus is on helping others to best prepare for economic uncertainty. Lynette, thank you so much for joining us today.
Well, I'm very happy to be here, Gary. Thank you for having me.
All right. Well, you've been studying and analyzing currency life cycles since 1987. That's more than 30 years. You've discovered similar social, economic, and financial patterns that occur throughout the stages of a currency's lifetime. You've stated that this leads you to believe that recognizing these patterns enables people to be able to see what's coming and make better decisions. What stage do you see the U.S. dollar currently as being in its life cycle, and how certain are you of that?
Well, I'll start with my level of certainty, which is frankly 100%. And we are at the very end stage of this big global, really, currency life cycle issue. And when you stop and think about it, I have a 9-year-old granddaughter. I guarantee you that she is at a different point in her life cycle than I am at almost 70. And you're not going to look at me and think, oh, she might be 10 next year. Just like you're not going to look at her and go, oh, she looks like she could be 70 next year. So currencies, actually everything has a life cycle, and currencies are no different. And what I'm seeing are those repeatable patterns that occur every time we have to transition into a new system. So we're looking at geopolitical issues. Do we have some wars going on right now? Are they proxy wars? Are they going to, some think in cyberspace we're already in World War III. We just can't see it. So we need the boots on the ground wars that justify inflation, justify government spending, justify a lot of things. We also typically see things around equality and civil rights. So, you can go back to when they first created the Fed, and what did you have? You had the suffragette movement, you had World War I. And also look at 1971, you had civil rights, you had the women's lib movement, and I was part of it. I got very obnoxious for a while. And what are we looking at now? We're seeing things about equality and the woke movement, so to speak, and the Me Too movement. So we also see issues around energy. I don't know. You think we have some energy issues that are happening right now? Inflation issues. There's probably more that I'm just not thinking of off the top of my head. But I'm really sorry to say this, but particularly when I look at the velocity of money, that's the number of times that money changes hands, and there's been a pervasive shift in that pattern since 1997, where it's been declining substantially, a little pickup every here and there, but now we're in a pervasive move. So I really hope that I'm wrong, but I really don't think that I'm wrong. I think I'm 100% right that we've already begun the hyperinflationary move. And look at how sticky inflation is proving to be. And all of the market pundits going, wow, I've never seen this before. Wow, I've never seen that before. When in reality, what those patterns are simply a repetition of history, maybe tweaked a little different because of where we are technologically. But yeah, I see all of those patterns that occur during the end cycle and the transition into the new system. I see all of them in play right now. So I'm 100% certain.
That's interesting. Well, Lynette, you recently wrote that when you know you're going bankrupt, why not take on as much debt as you can? In a 2011 interview, former Fed Chair Alan Greenspan stated that the United States can pay any debt it has because we can always print money to do that. So there is zero probability of default. So since the U.S. has the global reserve currency and can print as much as they want to, can the U.S. truly ever go bankrupt?
Yes, but they will do it in a way that you don't understand that that's what they're doing, which is exactly what they've been doing, which is to repay that debt with dollars that have less and less and less and less value until, and officially go to the Fed, you'll see that the purchasing power has just been on a massively steady decline. And when you have more rapid inflation, what that actually is telling you is that that decline is speeding up. And, you know, we're on, officially, we have 3 cents, a shade more than 3 cents left. And I don't mean 4 cents, I mean 0.03, maybe 1.2 or something like that right now. So people still have confidence that the dollar will always be there, and they will keep the name, because that's what they do. They change the system, but they keep the name, and they try and make these transitions look as much like normal as possible, so that you don't understand that anything has changed, when in reality, everything has changed. And I was there in 1971. So I remember that transition from at least a quasi gold-backed currency to a fully debt-based currency, with private central banks regulating the rate and speed of that inflation. And their job was not to take care of us or even create what they like to call as price stability. Their job is to take care of the banks. And since this whole system has predicated on creating more and more debt, that's what those interest rates do. It regulates or at least in theory. Now it's different, but in theory, and it worked this way for a very long time, where regulating the interest rates, you raise the interest rates when you want to slow down inflation, which is what's been happening on a global basis. You drop interest rates when you want to speed up that inflation, because more people then borrow and spend. If rates are higher, in theory, and I say in theory because the central banks want you to think that they are doing tightening by raising the rates. But when you look at the data on how loose the financial conditions are, they're still quite loosey-goosey.
Right. Well, it's interesting that you bring that up, because as part of this question, I'm going to kind of go into that loosey-goosey a little bit. So, excuse me, with inflation still elevated, it's clear that the current interest rates are just not restrictive enough, right? So debt servicing costs are skyrocketing as interest rates rise, but so is everything else: markets, house prices, car insurance. Everything is literally rising in unison. So, but not to mention all the money that is being earned by those who have substantial savings because of those higher interest rates. So for instance, if someone had $1 million in a CD or money market a few years ago, when it was earning 0.5%, they earned maybe $5,000 in interest in a year on that money. At today's rates, they're earning like 10 times that amount, or about $50,000 annually. That's a lot of extra money to be spent into the economy by those who have assets and wealth. So it's definitely not restrictive, and it's helping a portion of the economy, a segment of those folks, to have extra cash that they didn't have before, to now spend, pass down to other, their kids, their grandkids, whatever. So if the Fed raises rates further, it seems like it'll only lead to greater inflationary impulses. And of course, debt will just skyrocket further. If they lower interest rates from a position that's already not restrictive enough, it seems as if that would be highly inflationary, and that'll cause markets, assets, and everything else to continue to go higher. What can the Fed truly do to lower inflationary impulses here?
Not a darn thing. And what you just said is exactly reflective of why I said I am 100% certain that we are at the end, because it doesn't matter what they do. They are out of tools, and inflation is proving stickier than they anticipated. And what are we seeing? We're now, the other part that's really pretty, I don't say scary, but if you don't really understand what's happening, you're extraordinarily vulnerable. Because what have we been watching since 2008 but synchronized central bank moves on a global basis? That is shifting now, because to your point, nothing is working, right? Nothing is working. Now, they may have in certain areas where they can finagle the accounting, make it look like the inflation is slowing down a little bit, but the reality is people go to the grocery store every week. They're noticing those prices continuing to go up. They go to the gas pumps. They're noticing those prices going back up. And OPEC Plus and they stated this a while ago, even when we had the pullback in oil, they want $100 a barrel oil. They need $100 a barrel oil. And clearly, we are not yet ready to make this transition to all clean energy or all of those things. So, yeah.
Well, $100 oil is going to circulate through everything in the economy, and that will push things even higher.
Exactly. So one of the things that I find really interesting, so I'm going to ask you a question here, if that's okay. Okay. But, if the central bank globally are out of tools, do you think they know it? Do you think they know this better than anybody else, since this is what they manage?
They're the masters of money. They absolutely know it.
Absolutely. So when you look at that and they know it, then you see on a global basis, central banks buying more gold than they ever have since it's been recorded. Yeah. And they're buying physical metals. They're not buying, well, they are also probably buying the derivatives, because that's how they can manipulate the markets without anybody really seeing. But do you think that perhaps what they're trying to do is orchestrate and then control this next financial crisis?
Yeah, I would think that if there's going to be one, if they know that there will be one, whether it's 3 months, 6 months, 6 years, whenever it's going to be, if they know that there's going to be a crisis, you would believe that they're going to figure out a way to orchestrate the play so they're that the play goes on seamlessly. Yeah, they're going to try. I mean, but it seems to me, okay, so someone recently told me that they see the markets going to 100,000, gold going to 5 to 10,000, and a bottle of Coca-Cola going to 20. So, in that environment, how does the bottom half on the economic ladder, how are they able to live in that environment? And how would the Fed or the global central banks synchronizing this, how would they be able to keep those people from rioting or from really taking to the streets because of the disparity here?
That is just the most perfect question, to be honest with you. Yes, I think they are organizing it, and studies. I mean, there's over 4,800 currencies that do not exist anymore. So there's a tremendous amount of data to pull from. On average, well, if you are already destitute, let's face it, there's only so far down that you can go, right? And if you have assets, actually you get to expand your wealth base. It's those in the middle. And we've been watching the demolition of the middle class in earnest really since 2000, right? So now you have basically two classes. You have the upper class that own everything, and you got the bottom class that have to rent everything. But 80% on average, because obviously some places are more and some places are less, but on average, about 80% of the population ends up in abject poverty, most of that coming from obviously the middle class. They're the ones that have the greatest shift in standard of living. And so that's number one. And I see this happening. I mean, look around, it's happening around the globe. And I know people like to say, oh, well, that's Argentina, that's Venezuela, that's Turkey, that's Egypt, that's here, that's every place. But here it's different. No. Well, it isn't different. And going back to the synchronized central banks, that's the trend that just began, where you had Switzerland, which is considered an advanced economy, lowering rates in an attempt to control inflation or have an impact, let's say have an impact on inflation, while you've got other countries that are raising rates and other countries like the US that are standing pat at the moment. So that creates even more danger in a system that is extraordinarily vulnerable. And yeah.
So I want to touch on the vulnerability in a moment with the debt, the expanding debt.
Yeah.
But you know, something that you just said really sparked something in me. I was having a conversation with my oldest daughter the other day, and the truth is that her generation, even if they come out with more than a master's degree, it's a struggle for them to be able to, you know, purchase a home. That's a pretty large and sizable demographic. I think it rivals or is bigger than the boomer generation. At some point, if that goes on, you know, 5-10 years, at some point that generation is not going to stand pat. Every generation has been afforded the opportunity to buy a home and to make a living and to plant their family. And if they can't do it for the first time in U.S. history, they are going to revolt.
I hope so. And I hope it's a quiet revolution, because that's really what I'm working for. And here it is. And, you know, you're in the industry, you know this. If you really want a quiet revolution and protect your opportunities and protect your purchasing power and plan for your family, all you really have to do is buy physical gold and physical silver. So you have enough people doing that, especially on a global basis. Guess who gets to have, this is my hope, guess who gets to have a seat at the table to the new system? Because that's what we got to fight for. Otherwise, we're going to end up with what the WEF says, you own nothing. But I got news for you. Wealth never disappears. It just shifts location. Right. So at least if you're with gold, you can have some of that wealth shift your way. But enough of us, if enough of us buy into physical metals and hold them, maybe we can have a seat at that table, because I want a seat there for us where we're going to have the same.
Unfortunately, so few own gold and silver, and so few believe that gold and silver is still money, or they look at it as a collectible item, a pet rock. And like you said earlier, I do fear that those people are going to get left behind.
Well, you know, and that really actually brings up the point of community, doesn't it? Because I've talked to people that said, well, if they don't get it, then that's just too bad for them. But that is not how I feel about it. Because what we're really asking people to do is have a major paradigm shift and admit that they have been lied to their entire lives, which is extraordinarily hard for people to do. So I feel like our community coming together can help those that weren't paying attention, and maybe we can even build the ranks. And here's a great example of that. In 2008, I knew that the system died, no doubt about it. At that time, I was living in a little 2-bedroom condo, getting ready to retire. I was going to go travel the world like 3 months at a time, stay in a place, learn their art, learn their cooking, and, you know, just play. But then 2008 happened, which I did not think I would see in my lifetime. And I went, holy crap, the system just died. And so instead what I did was I bought a house and I stayed I'm in dead central Phoenix. Because I knew my daughters wouldn't go anywhere. And I would never leave them. So I figured, okay, I got to build a last stand. I am not by nature. I'm not a gardener, nor am I a farmer. But I have become both of those because I knew without a doubt, because of all my studies, that the single biggest issue for most people is food, right? So I bought this property. I'm sure my neighbors weren't happy with me for a while, but I planted food on the entire exterior of I'm on a corner lot on my little half-acre property, so that if somebody is walking by and they are hungry, they can pick a pomegranate, they can pick a zucchini. Because to your point, when people become hungry and hopeless, they make choices they would not otherwise make. Same with governments, right?
Yeah. So that'll, and in the major metros, there's studies that show that that's 3 days. That's 3 days, and then what we're talking about here begins. I've got one more question on inflation, and then we'll move on to some more here. But there seems to be new inflation warnings literally popping up everywhere.
Yep.
Recently, right? I mean, the Bank of England policymaker Catherine Mann said the fragmenting global economy will leave countries more exposed to inflation shocks in the future, posing a test for central banks. Are you looking at double-digit inflation? Are you thinking that this will settle down to 3 to 5%? In all honesty, where do you think this inflation is going?
A lot higher. I believe that we're at the beginning of hyperinflationary depression, because what's holding the system together right now is, we all know, well, we don't all know. I wish we all knew. This is a con game, right? There's no substance. What supports a currency? The full faith and credit of the government. And if you translate that, as long as you trust them, so you have faith, then you will continue to loan them money, extend them credit. Now, since 2008 and starting in 2008, I've been watching the levels of confidence go away. So in 2008, it was bank-to-bank confidence. There used to be this chart at the Federal Reserve Education Department, interbank lending. Boom, down. Banks stopped lending to each other, and they're a whole lot more cautious. So one key layer of confidence gone. In 2015, it was the Swiss surprise. So the Swiss had pegged, just briefly, the Swiss had pegged their currency to the euro dollar. There were lots of things that happened there similar to mortgages that happened here with the variable rates, but they had pegged their currency to it, but their currency was then, it was chomping at the bit, because no currency pegs last forever. In other words, you have to do exactly the same thing as the other currency that you're pegged to economically, or the peg breaks. So the Swiss central bank kept coming out and saying, no, it's the highest priority. It's the highest priority. It's the highest priority. And understand, they're meeting at the IMF constantly, right? And boom, 2 days after they came out and said, this is our very highest priority to maintain that peg, they broke it. And so central bank to central bank confidence was gone. And now we're watching this whole synchronization being tested. And then in June of 2022, when the central banks since 2008 had used forward guidance to guide the markets to what they were going to do. So the markets they'd say, you jump, this is where we're going. And that way they could benefit from it. So in June of 22, they kept going, okay, 50 basis point increase in interest, 50 basis points, 50 basis points, 50 basis points. When they came out and did the 75 basis point move, which
right after he said he was not going to do a 75-point move.
Exactly. So the markets have lost confidence in the Fed. And you remember, it was always don't fight the Fed, right? Well, what do we see now? We see the markets fighting the Fed. Could the markets overwhelm the ability of the Fed to bail them out? Sure, derivatives, in the quadrillions. Nobody really even knows the value that's at risk. They admit it. Every single entity, IMF, BIS, Federal Reserve, FDIC, take your pick. They all admit that nobody understands or knows how much value is truly at risk. It shocked me when they did that, because that was a huge tool that they had that they gave away. So there are three key layers of confidence. What other confidence level is there? Public. It's the public confidence in this stuff and in those that are in power, believing that the central bank can do this, that they know what they're doing, etc. What happens when that's gone? Then this, right? There's your hyperinflation.
Yeah, wow. Well, you paint a pretty scary picture there. So since 2014, talking about risk, we're talking since 2014, China and other nations have been buying way less treasuries, and instead they've been turning to buy way more gold. Now, lately, we see nations looking to exclude the US dollar from their bilateral trade, and instead they're working to trade in their own currencies and then settle any trade differences in gold. Some say that this is the death knell for the US dollar, while others are saying that that's hyperbole and sensationalism and that's unrealistic. Well, while it may not be the end of the US dollar, it is clearly a sea change from how the countries transacted before. And their transaction volumes are fairly high, and they're growing too between each other. So what does this shift really mean for the US dollar? And as a result, to all of those who are watching right now, meaning how will it affect their lives over time?
Well, there's a lot. Let me add one more thing to what you said, which is, in this digital world, the plumbing of the financial system is changing. So where it was dollar-centric, what they're looking to do right now is a universal currency. And I think it'll be the IMF's SDR, because that's the one that everybody has. It makes the most sense. It's a basket of currencies, but they can put every single currency in there. So you have this universal currency that is easily translatable into a local currency. But once this digital plumbing is put in place, because even though the rest of the world in other areas are looking to de-globalize, kind of think about supply chains, monetarily, they are rushing forward in unison to end up with one world currency. They don't want you to know that, right? So we're still going to have the local currencies, because again, going back to how they make these transitions, if you took the dollar away from people, they'd go, what happened to the dollar? They would notice. But if it's still called the dollar, even though it's something else, like they did in 71, they can get away with it because people go, well, the dollar will never go away. But here's the key piece. Well, there's two key pieces. Number one, the International Monetary Fund set up a new system, the SDR, in 1969 to take over as the world reserve currency. But then Kissinger went to Saudi Arabia and created the oil dollar, right? But look at what's happening with Saudi Arabia joining the BRICS. Lots of other countries have too, to your point earlier, but the most important one to the US dollar, in my opinion, is Saudi Arabia. So they've already shifted that alliance. We just don't know it yet, or most people in the US don't know that yet. So we have those two factors. We've got the factor of many other countries seeing how we use the SWIFT, which is the global exchange system, which is one of the things that maintains the dollar as the world reserve currency, right? The world saw us use that as a weapon, and they've been buying a lot more gold since then, because that's how Russia got around it, right? But once that plumbing is in place fully, how easy will it be to turn off the US system. And I know the SWIFT system is doing their best to stay relevant, but I don't think they're going to be successful at it. They're going to turn off that one plumbing system and turn on the other plumbing system. And if what you're left with are dollars, again, there's your hyperinflation.
You're going to have to turn them in for whatever the new currency is.
And
at whatever rate that they're telling.
Right. Exactly. I mean, you know, you look at what's happening in Zimbabwe, and I'm watching that very closely because they are experimenting, right? And the whole world is watching, even though people go, well, that's Zimbabwe. They've been dealing with hyperinflation since 2006. But about a year and a half ago, what'd they do? They came out with a physical 1 ounce gold coin. Who can afford that? Just the 1%ers, the upper echelon in that country. And then they put a component of gold into their gold-backed CBDC. Well, that didn't get adoption because you can't convert that CBDC into the physical, and the public has lost all confidence in that whole system, in the government, in the central bank, in the monetary system. They've lost confidence because they've been sorely abused for so long, and they've had lots of transitions into new currencies. Now they came out with a ZIG, which has a basket of currencies like the SDR, although, and I have to relook at it, when they came out with it, I couldn't find what that basket was or what that percentage was, with a component of gold, which again, I couldn't find out what percentage of gold was in that basket of currencies. So that's a big test, and that's why I'm paying attention so closely to it. Like I'm certain every other central banker is paying attention to see, can they get adoption from the public? Can they regain that trust from the public to start using the new currency again? And I'm thinking no. And the reason why I'm thinking that is because, again, until you, everybody hear me so clearly on this, until you can actually have a tool that holds the government and central banks accountable. In other words, you could convert this into this like you used to be able to do. It ain't over. They're going to continue to abuse it. Even if they get the public, once that confidence is lost, it is almost impossible to get back. And we've witnessed that in countries.
So we're talking here about gold and countries like Zimbabwe experimenting with gold. According to a very recent Citi analysis, hedge funds and other money managers have been actually stepping up wagers on gold as the bullion reached a series of new highs recently on the back of accelerating inflation. Overweighting precious metals has become now the consensus among the largest money managers, with 83% of them being long the asset class, according to this new Citi analysis. And the study also found that gold is the only commodity that the big allocators have added to over the last month. What is this? Yeah. So what is that indicating to you? I want to point everyone over to our Substack. It's free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and of course, all of the interviews that we conduct. And when you subscribe, we want to give you a free gift. It's a report that we wrote based on an important Ray Dalio foundational premise titled, "If you don't own gold, you know neither history nor economics." This free gift is a must read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe. It's free, and get the free gift.